Good morning. Before break, we were working on the work together and the on your own in Chapter 6, which is a financial worksheet at the end of a fiscal period. I wanted to review a few things with you before we got started today. Last week, we started a financial worksheet. Remember, the top of the financial worksheet is Golden Tan, the name of the business. The second line is the name of the document. And the third line is for month ended February 28th, 2016. Now, once again, the reason that we have for month ended is because we are doing monthly fiscal periods for this particular business. Most businesses do yearly fiscal periods, which again, a fiscal period is a financial period. But because these are new startup businesses, you may want to keep a closer eye on the finances, which is why this company would be doing monthly fiscal periods. So you need to make sure that you have your work together from last week and you're on your own in front of you. This was on page 155 or started on page 155 of your textbook. And in your workbook, this particular one was page 121. Last week, we did a trial balance for Golden Tan. And the trial balance, once again, comes from the general ledger account balances. So we would go through the general ledger and we would see what the account balances are for each of the accounts, and we would list them. Because we have a trial balance here, you would want to make sure that your debit balance equals your credit balance for all of the accounts that you have for your business. So these, of course, you would want to equal. Today, we're going to concentrate on adjustments. Let me talk to you about what adjustments are. Adjustments for this business, for an Accounting 1 student, the only two accounts that we're going to adjust is supplies and prepaid insurance. That being said, I'd like you to turn in your textbook to the place in your textbook where you have those cellophane inserts. And that is after page 160 in your textbook. So if Miss Anderson would pause the video until everyone turns to page 160 in the textbook and flips over to illustration B, so that we can look at that particular tool in our textbook. Now that we're all on the B page where the cellophane inserts are in the textbook, I want you to look at page B. Page B shows Techno Consulting's financial worksheet for month ended August 31st, 2016. As you can see on that page, the trial balance is there and the debits equal the credits. Very similar to your work together and on your own from last week. Now I want you to flip the first cellophane insert to where you see the adjustments. The two adjustments, or the two accounts that we're going to adjust, as I said earlier, is supplies and prepaid insurance. The reason that those are the two accounts that are to be adjusted is because they are consumables. Consumables are things that you use up. They're assets that you use up. I want you to listen to this next statement because it's very important. An asset is an asset until you use it up. Once an asset is used up, it's an expense. The only two assets that we have that are used up is supplies and prepaid insurance. Now let's talk about supplies for a minute. If we were starting a Christmas cookie baking activity and we wanted to make money for the month of December in making Christmas cookies, and we have $100 that we'd like to put in supplies for our cookie baking, we would buy eggs, we would buy flour, we would buy sugar, we would buy Crisco, we would buy chocolate chips and everything that you would need for successful cookie baking. So then we would have $100 worth of supplies. As we're baking cookies throughout the month of December, we're using up supplies and we're consuming them. Again, an asset is an asset until we use it up. Once it's used up, it is expensed. I want you to take a look here at my supply amount at the beginning of the month. The beginning of the month, I have $456. Now I'm up on the screen now. $456 worth of supplies. At the end of the month, clear over here in the balance sheet column, I have $325 worth of supplies at the end of the month. So this number, 456, represents what I have at the beginning of the month, and the 325 is how much I have at the end of the month, perhaps after cookie baking. So I started with $456 in supplies and I ended with $325. What I'm going to expense is what I've used. So to get that number, which is your adjustment number, you're going to take the end of the month balance from the beginning of the month balance, what you started with, and the difference is 131. That is your supply adjustment. Again, since an asset is an asset until you use it up and then you expense it, the contra account to supplies is supplies expense because I have to expense that asset. The reason that I'm crediting supplies up here, because everybody knows by now that supplies is an asset and it is generally debited. The reason I'm crediting it is because I'm taking away from the balance of supplies, 131. So if I take away from the balance of the supplies, I want to add to the balance of supplies expense because I'm expensing that asset. This is your debit and this is your credit. Note that there's a little a in parentheses here. There's a little a in parentheses here. That's because that is a transaction. Notice that when we do the prepaid insurance, that's B transaction. Now I just did this with accounting 2 before I left on my leave, and they have an A, a B, a C, a D, an E, an F, a G, an H, and so on. So these letters help you to navigate in the adjustment column. Now we are really doing a condensed, easier version of a financial worksheet than what accounting 2 is doing. So you only have an A and a B. So just make sure you put a little A for your supplies and a little B for your prepaid insurance. So let me just recap that. The book is going to give you the amount of supplies you have at the end of the month. That is going to be the number that goes in your balance sheet column. The trial balance represents how much you had at the beginning of the month. You're going to subtract your balance sheet amount from your trial balance amount, and the difference is what you have consumed or you've used up and you need to expense. Now let's talk about prepaid insurance for a minute. Prepaid insurance, again, is a consumable. You use it up. So since it's a consumable, you are going to expense it with insurance expense. Now, prepaid insurance is paid at the beginning of every quarter. So at the beginning of the year, you pay, let's say, $300 for your first quarter of the year in insurance. That means that for January, February, and March, you've paid $300 and $100 is how much your insurance is a month. Now, after the first month, after January is over, you need to expense that 1 month of insurance. And then in essence, you have $200 worth of that asset left, and you are expensing the $100 you've used up or consumed. Again, an asset is an asset till you use it up and then you expense it. According to Golden Tan's worksheet, we had $750 at the beginning of the year. The book is going to tell you you have $500 at the end of the year in prepaid insurance. Therefore, the difference when you subtract $500 from $750 is $250. That's what you have to expense. So your prepaid insurance is your credit here because you're taking away from an asset, and $250 for insurance expense is your debit. Note that you're going to put a little B there showing that that is the B transaction. Now, what I would like everyone to do is turn to page 150 or 161, excuse me, in the textbook. 161 in the textbook. When you're on page 161, you will be able to see that in the work together 6.2 that they're showing that a supply on hand is $325. Note that it says adjustment information on February 28th. That's the end of the month. So this is where you're going to put that $325. Again, we're going to subtract that from the beginning of the month balance to get the difference. Referring to page 161 again, the value of prepaid insurance in the work together is $500. You're going to subtract the $500, which is your end of the year value, from $750 to get the $250, and you use your contra accounts down here to balance and offset that. I always recommend that students, even though you don't know what to do in the income statement column yet, you don't know what to do in the balance sheet column yet, because we haven't covered that yet, I always recommend that since the textbook are giving you how much the balances are for the end of the month for supplies and prepaid insurance, go ahead and put those in your balance sheet section now. Once again, it's $325 and $500. Now, on these financial worksheets, you'll see that some of these lines are darker than others. Those are eye guidelines, so that you can follow along with supplies and across here, and there's a dark line above it. It's just an eye guideline. Now, because you have the same for debits as you have for credits, your adjustment columns, here's your debit column, here's your credit column, are going to equal as well, with $381 as a total when you add your $250 and your $131 together. And then, of course, $381 is your credit because you're adding the same two digits in your credit section. Because you have come to equality with your trial balance debit and credit and your adjustment debit and credit, you need to take a ruler or a straight edge and double roll all the way across the bottom of those four columns. Again, that's showing equality and completion. Tomorrow we'll learn about the income statement and the balance sheet columns. For the remaining of the period today, I would like you to go ahead and complete the adjustment information for your on your own problem. The on your own problem is going to be on pages 155, 161, and 166 as well. The adjustment information you're going to find on page 161 of your textbook. Keep in mind, the book is going to give you these two digits that go in your balance sheet debit column. You're going to subtract the digits that the textbook gives you from your beginning balance, and the difference is your adjustment total.